talking about the Starbucks problem from previous class. What can you do? You can find out the actual financial statements from the Starbucks from the web. You'll find it from the NASDAQ site, or you will find it the actual financial statements from the Starbucks site. Okay, so I have collected it from the Starbucks website. No, there's a site which provides all the annual reports available. Okay. So we worked on the balance sheet, reformulated balance sheet in previous class. In today, we'll work on the statement of earnings. Okay. So if you have the text, the 5th edition of Penman, and if you open the page number 329, you will see the consolidated statement of earnings are there, and the numbers are exactly similar, exactly same. So it indicates that we do exercise based on the real numbers. We do not make exercise based on some fictitious number. Okay. So what is our task? Our task is to prepare a reformulated income statement. Can you recall what I mentioned before making a reformulated statement? Reformulated statement of earnings. We need to make the reformulated statement of shareholders' equity. Can you recall that I mentioned it during our discussion in the first part? Can you recall? Before proceeding to the reformulated income statement, we need to make our reformulated statement of shareholder security. Can you recall that I mentioned about this thing? Or I didn't mention it? Yeah, I mentioned it. For what reason? For what reason? Why it is essential? Okay, thank you for your responses. You have mentioned it correctly, that because the statement of shareholder security will give us some numbers which are dirty surplus items, and we need to take those items to the reformulated income statement. That's why before making a reformulated statement of earnings or a reformulated income statement, we need to prepare a reformulated statement of shareholder security. Okay, so as doing the problem, comprehensive problem requires time, and you have the limitation of available time. So what I have done, I have prepared this before starting the class so that I can use it in written form, and I will explain what I have done. Okay. So first thing first, the reformulated consolidated statement of shareholders' equity. So if you have the, I believe you all have the text. So what can you do? Open the page number 331, where the consolidated statements of shareholders' equity is given. We need to make the reformulation. We need to make the reformulation of this statement first. Okay. You see, what is the starting point? Firstly, we need to write out what is the balance, the beginning balance of the shareholders' equity. Beginning balance, okay. If I take the red, it will be clear here. Okay. What I need to do first, I need to take the balance of shareholders' equity beginning balance. Okay. So this beginning balance is given from this beginning balance is given. You see, I have written the numbers in million. So it is 2,228 million, 28.5 million. It is as it is. There is no problem. Follow the total amount. Follow the total column. Okay. Then you see some items there, and some of the items reflect that what is the net payout to the shareholders, and some items reflect the other comprehensive income. Okay, we need to separate those items, and then your reformulated consolidated statement of shareholders equity will be done. Have you got the root? Otherwise you will make confused. Otherwise you'll get confusion. You'll get confused. Let me make it clear that you got the brief, you got the broad idea first, that what we are going to do. We are going to separate out the net payout to the shareholders equity, or net payout to the shareholders, and the comprehensive income part. Okay, comprehensive income part includes the dirty surplus items actually. Okay, so you see, what does it mean? A net payout to the shareholders. Net payout to the shareholders means that anything which increases the equity will be credited to the equity. So that is a good thing, because it is raising the equity value. And any item, if it reduces the equity value, that will reduce the equity value. So that amount will be a minus. Okay, so I have applied it. So have you got it? The idea of net payout to the shareholders, anything if it increases the equity value, that will be positive for the shareholders equity, and anything which reduces the value of shareholders equity, that will be negative. And the netting out the positive and the negative indicates the net payout to the shareholders. Okay, so let me ask you, we follow from the text 331. Unrealized holding loss, it is not a part of their translation adjustment. We'll see that this is a part of the comprehensive income or the data surplus. Okay, not a stock-based compensation expense or comprehensive income, but you see, there is an exercise of a stock option. You see, exercise of a stock option, including tax benefit. Have you seen this item, exercise of a stock option? If there is an exercise of stock option, what do you think? The shareholders' equity will go up or will come down? Think of the accounting equation. It will go up. That's why it is plus. That's why it is plus. Similarly, if there is a sale of common stock, including tax provision of 139, the next item after the ESOP, you see the sale of common stock, it will increase the equity value. That's why it is plus. Okay. Next thing, you see the repurchase of common stock. What will be the consequence on the shareholders' equity? Will the equity go up or go down? It will come down. So these are the things here. And if we sum up, we see that net payout is negative. What do you think net payout is negative? Because during this time, company has repurchased more shares than issuing shares. That's why equity net, it is the net, okay? And net during the period. Or you say during the period it happened, and you are thinking of what is the value on the particular date, okay? So net amount is here negative, okay? Why it is negative? Because we'll see that this amount, because the net amount is negative, it will obviously reduce the equity value, which is the beginning balance here. Okay, next, comprehensive income. Do we have any dirty surplus item? First thing first, Unrealized holding loss net. You see the second item after the net earnings. You see? Okay. So what we are doing, this is the net income. It is coming from the income statement, net earnings. If you open the page number 329, in the income statement, you see the net earnings reported is 672.6 million. 672.6 million. So that is the part of, you see, actually, when we talk about the comprehensive income, this is a clean surplus item. These are dirty surplus items, or these are other comprehensive income. In total, they are known as comprehensive income, in total. Okay. So this is coming from the statement of comprehensive income, statement of earnings, or you can look at this amount is in the statement of shareholders equity. So it will actually increase the value of equity. That's why it is always positive. Okay. If it is loss, in that case, it will be a positive number or it will be a negative number. If it is the company incurred loss, it will reduce the shareholders equity. Yeah. Okay. Next, unrealized holding loss net, which is after the net earnings. You see a footnote in the page number 331 that they mentioned the unrealized holding loss in comprehensive income referred to losses on available for sale debt securities. So unrealized losses coming from some financial assets. You probably can recall the debt securities. I have made investment in debt securities. It is always the financial asset. The categories available for sale. You recall the available for sale, held to maturity, held for trading. These are some IFRS classification of the how you will disclose the investment in financial assets. Okay. So one category available for sale, you see the unrealized loss, and you are observing and you are reflecting this as in the other comprehensive income. Okay. So this loss will reduce the equity value or increase the equity value. It will reduce the equity value. That's why I have mentioned it as a negative. Okay. Next one, gain from translation. Translation adjustment net of tax. Okay. You see, I have mentioned it. And you see the example from gain from translation adjustment, a very realistic example from the news I shared with you regarding the Square Pharmaceuticals gain of 19%. I mean, they have generated a 19% income out of their total income they have produced in last 6 months. 19% of their income are coming from some item which are I would say other operating income or other financial income. And you will see that they have mentioned that one of the sources is they have made some gain from currency translation. Okay. So this amount is here that will positively affect the shareholders' equity. That's why it is positive. So net effect from this is positive. That's why it is here. So if you add all of this, you will get the ending shareholders' equity, this amount. Any confusion up to this? Because I will go to the statement of earnings for reformulation, and I will not go back here, or I will not come back here. Any issue with this? Yes, no? Any issue with how we will reformulate the statement of shareholders' equity? Yes, no? Should I ask you by name or by ID? Okay, no. So let's proceed to the reformulated comprehensive income statement. The next task, based on our requirement. Okay, what we are going to do. Now let's turn to the page number 329 from your text, because we have a statement of earnings, consolidated statement of earnings, and we like to reformulate it. Okay. What is about the stock-based compensation expense? Stock-based compensation expense. Okay. Can you recall that in the liability analysis class, we talked about some stock-based compensation? In the liability analysis, can you recall? We talked about that sometimes firm commit with the management that will provide you some stock-based compensation. Yeah. So that is actually we are making commitment, and if we make a commitment and we'll incur liability or not, we incur commitment, but there is some uncertainties with respect to what will be the amount actually. But in general, it will always be considered as the part of other liabilities. Am I clear? If you recall what we did in the reformulated balance sheet in the previous class, you will see that we wrote it, the stock-based compensation in the balance sheet in the part of other liabilities. Okay. So I mentioned in that time that I'll tell about it in today's class. Okay. Thank you for reminding me and reconnecting it again. Okay, fine. So in the page number 329, you have the statement of consolidated statement of earnings. I again like to remind you that it has been directly taken from the actual statement of earnings. Okay. So you see the Starbucks company generates a net revenue from these two broad heading. One is retail outlet, another one is licensing, food service, and other, which are categorized as specialty. Okay. So do you like to know that how they have modeled their revenue? Do you like to see that how the revenue from company operated retail look like and how the revenue from a specialty look like? Or you'd like to believe that these are some abstract number, some nonsense number, it has no story behind it? Okay. Obviously, you need to find out the story, that how they generate revenue. You see, together with subsidiaries, they mention that they purchases and roast high quality whole bean coffees and sells them along with fresh, rich brewed coffee, coffees, Italian style espresso beverages, cold blended beverages, a variety of complimentary food items, a selection of premium teas and coffee related accessories and equipment. So you see, these are the items that sell simply. Primarily through, it is primarily, okay, the retail is their primary business, okay, primarily through its company operated retail store. This is the first line item in the net revenue, under the net revenue. However, Starbucks also sells coffee and tea products and licenses its trademark through other channels such as licensed stores and through certain of its equity investees and licenses. So you see that they have provided license to some other parties, some equity investment to some other parties, and they also sell Starbucks products and they generate revenue. And broadly, they categorize those as a specialty operation. Have you got it? That what they try to mean by their net revenue from the company operated retail and the specialty? So I hope you have got it and you have got it interesting. Okay, always you need to know the business first, understand the business first before going for reformulation. Otherwise, certainly you are going to commit mistake. Okay, obviously your task is to first understand the business. That's why we mentioned in the financial statement analysis framework, the beginning classes, the understanding the business is first. Okay, otherwise the analysis will be misleading. Okay. So we have learned that Starbucks is not a finance company, right? They might have some financial assets because they are using some of their surplus cash to make investment there. Okay, so now follow from the text or follow from the annual reports. I do not know whether it is available with you, but as I have opened this window available, the whiteboard, that's why I cannot keep the 10K report open. Okay, you see. So from where I have started from the total net revenue, not from the first net revenue. Here I have started from the total net revenue. What I'm doing, remember the three classification. One is operating income from sales. Another one is other operating income. And the final one is net financing expenses. These are three reclassification category, or the three reclassification basket in which I have to pour the items from the conventional income statement or statement of earnings. Clear? Okay. So first thing first, the operating income from sales. The total net revenue is straightforward, the positive amount here. The cost of sales, including occupancy cost, this is a cost which is directly connected to sales, not remotely. That's why it is here, the negative amount. The store opening expenses obviously connected to the sales. That's why it is a negative item here as it is expenses. Other operating expenses, we do not have idea whether it is part of the other operating income or it is part of the operating income from sales. If we do not have any other clue, we will assume that it is part of the operating income from sales. That's why it is here, 294.1 million. Next one, depreciation and amortization. This is obviously an operating item. No confusion with this. General and administrative expenses for 89.2 million. And we know that general and administrative expenses is necessary to make my goods sold to the customers. Okay, fine. So if we subtract all of this amount from my total net revenue, I'm getting a net amount here. What does it indicate? It indicates the operating income from sales, but before taxes. Is it? Up to this, any confusion? No confusion, thanks. So we can proceed. So here, reported income tax, it is directly from the statement of comprehensive statement of earnings. You see the income taxes 383,726 in the page number 3 on the page number 329. So I have written it here, and note that we will write these things later. This will be note that this will remain as blank. I am removing this, otherwise you'll make it make mistake here. Okay, so it is directly from the statement of earnings. Okay, one question. Why don't we use the total operating expense instead of separating each operating expense? Okay. The idea is that I mentioned, can you recall? that even if there is a general and administrative expenses, a lump sum amount in the reformulated statement, you have to separate out the general and administrative. And if you have a selling expense, that you need to separate this amount out. That's why I have not used the total operating expenses. Have you got it? The idea is that I have to break down all the expenses clearly. That is the reason. Okay, fine. So leave it here. We will come back here. Leave it this part here. Okay. Remember, these items you can write from the beginning, but the amount will come later. Don't write the amount here because the item amount will be coming from other part. Okay, next item. Other operating income. We see because it will come immediately after the operating income coming from sales. Okay. We see there is an item which is income from equity investees. Income from equity investees. Can you recall that we mentioned in the Starbucks 10K report that how Starbucks generate this income? They have made some equity investment. Can you recall that I also mentioned that when the company in which Starbucks has made investment, they give back the profit or they share the profit with the Starbucks. They make it after tax. They make it after tax. They make payment of taxes, and the remaining amount is given to the remaining amount will be given. I mean, after tax amount of profit will be given to the Starbucks. Have we got it? I have made equity investment in, say, some subsidiaries, but when subsidiary will make profit and make payment, make share of profit to me, payment of profit share with me, they will make the payment after tax. Okay, it is by tax convention. It is by tax convention why it is after tax. Okay, in that case, can we include this in our calculation of taxes, or we need to separate this item as operating income after tax items? So as it is an after tax item, that's why I have written it separately, because we do not need to make any tax calculation out of this. Have you got it? That's why I have written the 108 million separately, income from equity investees. Income from equity investees, I have written it separately because it is the after tax amount. Okay, next one. The operating item is not our concern here. Net interest and other income. That is the area in which you need to dig. You need to explore that what items are hidden there. Am I clear? Now you see that in the page number 331, in the footnote 4, they have provided a footnote related to this item, what we just have mentioned, net interest and other income. It has been mentioned that net interest and other income in the 2007 income statement includes the following in thousands of dollars. Interest income of 19,700, interest expense of 38,200, realized gain on available for sale investment 3,800, gain on asset sales to 26,032, and other operating charges 8,913. Have you got it? Footnote from your text, have you got it? Okay, you have got it. You see, out of this breakdown, as it is broadly mentioned as interest and other income, you see some income or expenses seem as finance income and expenses. Some income and expenses indicate that they are not finance, rather they are part of other operating income. Do you think, is it right? Some items which have been included in the line item are part of the other operating, they are not part of the financing. Okay, because they have mentioned the item as interest and other income. So you have to separate out the other income because probably that is part of other operating income. So you see from the list, which item will come as other operating income? What do you think? Interest income? No. Interest expense? No. Realized gain on available for sale investment. What do you think? Should it come here? Realized gain on available for sale investment. Okay. Shohak, you have mentioned that realized gain will appear here in the other operating income. Now, next question to you. If the available for sale investment, if the investment is equity investment, will it come here? Or if the investment is investment in debt securities, will it come here? What do you think? Let's assume that it is a long-term equity, long-term investment. Note that we talked about that if it is a debt securities, in that case, it will come or it will not come. If it is investment in debt securities, it will appear in the other operating income or it will appear in the financing item or financing income or net finance part. What do you think? If it is the debt securities, the investment about which it is mentioned, if that investment is in debt securities, will it appear in the operating income part or the financing part? Is my question clear? Financing part. Kamrul, thank you. You see that footnote 7, sorry, no. Probably it is mentioned in okay. You see the footnote 1. We used the footnote 1 in the previous class. Short-term and long-term investment available for sale are debt securities. So what does it indicate? The realized gain on available for sale investment, that is also debt investment in debt. In that case, this realized gain on available for sale investment will come in the other operating income part, or it will go to the net financing expense, net financing part. That will go to the net financing part. Okay, that's why I have written here. Okay, realized gain on the available for sale debt. Okay, now you might ask question that why it is a negative amount. We'll talk about it separately here. So we first finish our discussion about the other operating income. Okay, we see is there any other item which should come in the other operating income? Gain on asset sale. You mentioned this classic example of other operating income, the gain on selling our asset. What do you think? We do not have any mentioning that it is a financial asset or operating asset. In that case, we can assume that it is probably from gain on asset sale is from selling some property, plant, equipment, this kind of asset. So what do you think? Should this gain appear in other operating income? Okay, so it is here. Other operating income in the gain on asset sale. I have written here the 26 million. Okay. Now there is another item mentioned, other operating charges, 8.9 million. So as it is, the word indicates the operating, not financial. That's why I have included in the other operating charges in the other operating income part. So this is here 8.9, as it is a expenses. That's why I have made the negative sign. Okay. So if you make a netting, you'll see that it is 17.1. And if I apply the tax percentage, so what is the tax percentage? From the footnote 6, you will see the firm's combined state and federal statutory tax rate is 38.4%. So you will always use the statutory marginal statutory combined statutory and federal, the maximum tax rate as the marginal tax rate. So we will not use the effective tax rate if it is given, rather we will use the statutory tax rate. Okay. So actually this rate will be applicable because the effective tax rate, which you might ask why not the effective tax rate? Because from the statement of earnings, when you see the effective tax rate, let me give you the idea. The statutory tax rate for Facebook is like 35%. Okay. But Facebook has mentioned that we are trying to reduce our tax effectively to 27%. So how it is possible that they have reduced the tax to 27%? So probably they have understated something, some assets, or they have undervalued some asset, and they will have consequences on their income, and they will be able to make it effectively to 27%. But by statutory guideline, their effective their tax is 35%. So if we use this, it will be misleading. Okay, because it might come from some issues which we do not know. So always use the statutory tax rate. Okay, so you see, if we have the 17.1 before tax other operating income, and if we apply the 38.4%, so what will be the amount? This amount will be 6.6, is it? The tax amount? So if you subtract this, you will get the 10.5. So what is this? Is it the total other operating income? It is not actually total other operating income. Rather, it is the that portion of other operating income which is on which the tax was not calculated. That's why we have calculated tax. And the after tax, this portion is 10.5. But you see, we have some other portion which are already after tax. That's why you have not included here. So in our other operating income, we have this amount, net amount, this amount, this amount. We talked about it, right? Have we talked about it? Income from equity investees and gain from translation adjustment. Have we talked about in this part? Yeah. We have not talked about. We have talked about these things when we are talking about the statement of shareholders, reformulation of statement of shareholders equity. Can you recall that we mentioned this item? We mentioned about this gain from translation adjustment. Let me take you to the, let me take you to the reformulated statement of shareholders equity. Can you see that we talked about it, gain from translation adjustment? So this is part of other operating income. This is not part of the financing, this is part of other operating income. So we are taking it as other operating income, 37.7. Okay, here, 37.7. So, and we already talked about it because it is directly coming from the statement of earnings. Okay, so if we add all of this, 10.5, 108, 37.7, you'll see that other operating income is 156.2. Total net other operating income after tax. Okay, you see that, have we got any amount which we should feel either this one or this one? Have we got anything from the other operating income section which should come here? Which amount should come here? Taxes on other operating income. You already have completed this part. Now the question is, out of this, which item should appear here? Which amount should appear here? The tax allocation issue, 6.6. Thanks. 6.6. Should it be minus or plus? Why? Why it is minus? Because we like to separate out the tax consequences of other operating income from the reported tax amount, which is 383.7, right? So that's why it is negative. Okay, next, so let's proceed. Net financing expenses. Again, go to the footnote 4 where we left. You see the interest expense there, sorry. You see there is an interest expense in the footnote 4, 38.2 million. Okay. Now you might ask that why we have not started with the net financing income, why we have started with the expenses. The idea is that our task is to find out the tax benefit. If the tax benefit is a positive amount, we have to, if the net benefit, if the tax benefit is a positive amount, we have to add back here because we like to see what is the actual consequences in the taxes on operating profit coming from sales if there are no tax benefit. Okay, so that is the reason that why we place heading as net financing expenses. Okay, that is for some reason, that is not for by choice. Okay, interest expense. So interest expense is 38.2 million, and you see that we can write the, okay, Shohak, you need to write, you want to make me repeat. Okay. From the net financing expenses, what we'll do, we will take the tax benefit. We'll calculate the tax benefit. So when the interest expense is a net interest expense is a positive amount, in that case, it is possible or it is available. Positive tax benefit is available. And if the net interest expense is not a positive amount or net interest income is a positive amount, you will see the tax benefit is not a positive amount, tax benefit is a negative amount, right? Okay. Can you recall that we wrote the equation which is look like net finance, okay. Financial obligations, we have subtracted financial assets, then we wrote net financial obligations. Can you recall this equation we wrote in the balance sheet issues? So then it's the same ground why we are starting with the financing expenses, then why we are subtracting financing income to get the net financing expenses? Okay, let's proceed. Okay, so we like to see that in the actual financial statement, what they did they provided any explanation for the interest income and other? You see that they provided interest income and other separately and interest expense separately. Okay, but you see the difference between 40.4 and 38.0 is the 2.4. Okay, that is presented in our text as net interest income and net interest. Net interest and other income. Okay, so there is a slight breakdown, but the detailed breakdown is provided in the footnote. For the sake of time, I'm not taking you to the footnote presented in the real, the real 10K report. Okay. Okay, fine. So after subtracting the interest income from the interest expense, we get this same amount, which is net interest expense. Okay. Now you see, our financing expenses story is not finished here. We have something which is coming from available for sale, financial securities, investment in available for sale, which is a debt security. You see that we talked about okay, where we wrote it. Okay, we already discussed about it, that the available for sale is the security is a debt security, the financial investment in the debt security, and we have made a gain of 3.8 million about, which is in the footnote 4. You see the realized gain on available for sale investment. We mentioned it, that we will talk about it. So it is actually here. So you see, this is a positive amount. So it will cause us the tax benefit or tax burden if it is the realized gain from the debt securities, from the debt investment in debt. There is a realized gain. Tax benefit. For the realized gain, we have a tax benefit or tax burden. Tax burden. Okay. So as we are subtracting interest income from the interest expense, and that's why this gain, which is a positive amount actually in terms of gain, but as we are interested with the expenses, that's why we are subtracting it. So try to understand the reason why we have put the subtract sign here. So we are subtracting income from expenses, that's why it's a negative amount. So you see that amount is 14.7. Now again, you recall the tax rate 8.4%. So if you apply the 14.7 multiplied by 384, what is it? It is the interest tax shield. So this amount is positive, 14.7. If the net financing expense is here in this part is positive, should we get tax benefit or we will incur the tax burden? What do you think? If it is a positive amount, I mean the net interest expense after adjusting for the realized gain on the available for sale debt, should we achieve tax benefit or tax gain, tax burden? Let me check your responses. Tax benefit, thanks. So that amount is 5.6. So now let me ask you, this tax benefit, if it are not there, our taxes on the profit would be higher or lower? If the benefit are not there, if this benefit are not there, and note that this benefit is zero, we have not been able to achieve this benefit. Our profit would be, taxes would be higher. Okay, tax burden would be higher. In that case, my adjustment to the reported tax, it will be a positive adjustment or it will be a negative adjustment. Here, note that I have kept it blank for this part. Yeah, so I have to put it here now, but we have calculated how much? 5.6. So here, 5.6. Okay, now you have all this. If you calculate all of this, 383.7 plus 5.6 minus 6.6, you'll see the 382.7. What does it indicate? It indicates the tax burden on the operating profit coming from the sales or coming from the core operations. You probably can recall that I showed you in this part here now. Okay, operating income from sales after tax, and it is coming from my core operation. Okay. Okay, let me take you back. Okay, this is 560. So after tax, it is actually the 563.3. And if you add 563.3 and 156.2, which is from other operating income after tax, this 709.5 million is net operating profit after tax, which is no PAT. Okay. Okay, let's complete it in this part. Okay, so it is 9.1. So after tax and the net financing expenses after tax, it is 9.1. So you see that we have some losses which are coming from available for sale. Please look at the page number 331 in the statement of shareholders' equity. We mentioned, we saw that there's an unrealized holding loss of the available for sale debt, 20.4. You probably can recall that I mentioned this item in the reformulation of a statement of shareholders' equity, this item. Unrealized holding loss on the financial asset, this is 20.4. So this loss is related to my financing. So this loss is needs to be added to the net financing expenses, as this is a loss. This is a loss amount. That's why it is actually it is a negative amount. Okay. So as we are making the negative amount positive, as we have started with the expenses, that's why it is a positive sign here, 20.4. But actually when you add back these two, 9.1, which is here, and 20.4, what I have just shown to you, which is coming from the unrealized loss from my investment in financial asset, specifically debt security. It is in sum, it is 29.5. Now the question is, it is an expense amount in total. It is an expense amount. So this amount in final should be a negative amount. That's why I have written here a negative amount, 29.5, as a net financing expenses after tax. If you sum up this positive number, 709.5, which is net operating profit after tax, and if you sum it with the net financing expense after tax of 29.5, you will see 689.9. And you see this is reflecting the comprehensive income. So this 689.9 is greater than the amount reported in the consolidated statement of earnings, which is the net profit 672.6. Now the question to you, why this number is differing? The comprehensive income is a bigger amount here, but the net income reported in the income statement is a smaller number here. What is the reason? What is the reason? Which items are causing these changes? Dirty, not the dirty items. It is dirty surplus items. Okay, don't underestimate those items. Okay, these are dirty surplus items because of their presence. So actually they are not dirty. You are getting some good things. You are getting some gains. Obviously you might incur some losses. Okay. So that is the way that how can you make the reformulation of the income statement. And we have completed the task for reformulated income statement for the Starbucks exercise. And note that there are some financial ratios calculation in the requirement C. And I will request you to look at the numbers we have produced in previous class and today's class based on the reformulation and use those numbers to find out the ratios asked in the requirement C. And we'll discuss about this in the next class.